Welcome back. There's been a mild slip on the Nifty in just the last few minutes. It's below that 15,800 mark now, just by a bit, so just about 10 points or so. And that could be attributed to, one, the decline that we've seen seeing in the Nifty Bank, which is now down by almost 110 odd points. And secondly, some bit of profit taking coming about for a lot of these IT names as well, the kinds of Infosys, Wipro, as well as TCS, as we move towards the close of trade. But no such problems for a lot of these mid-cap stocks as we speak. In fact, there's been a big move in a couple of these pharma-related names. Kaplan Point, for instance, has seen a sharp surge in just the last few minutes. Alongside that, we have Dr. Lal Pathlabs as well, which is surging as we speak. And the last hour of moves that we saw in the metal stocks has now percolated down to the metal ancillaries as well. Case in point, something like a Sarda Energy, which is now up almost 11 odd %. Godavari Power has been doing well all through this week, up 36% this week, continues to move well, is at the high point of trade. And we also have Tata Metallics, all of them doing well. So the broader market's doing well. The mid-caps are outperforming, whereas the Nifty as well as the Nifty Bank have moved a little off their highs. So the perfect time to get in our D Street Chatter, where Nimesh will get us an insight into what he's been making up or making of the move in the markets from the people he speaks to at dealing rooms. Nimesh.
Hi Mangalam. So, a bit of a Friday factor playing out. Range bound day of trade. The volumes are on the lower side, and even the institutional participation is quite low, is what I understand from dealing room. So that's a clear feedback. In terms of sector, it looks like a bit of risk on is back in the metal names. So not only the larger institutions, but even the retail investors seems to be playing out a pullback rally in metal names. So that's clearly playing out today. A bit of buying back in the pharma names as well. But I think the bigger sector to watch is the technology names. I'm getting a consistent feedback from dealing rooms that most of the companies in the various investor conferences have been consistently talking about strong FY22 in terms of top line as well as in terms of margins as well. So that's the space where you're consistently seeing some bit of buying interest from the larger institutions. So technology stands out today, metal names stands out, and a bit of a pullback in the pharma names as well. But as I said earlier, the volumes are on the lower side, so not much to say in terms of larger institutional participation, and it's a bit of a Friday factor as well.
Friday factor for sure, and it's been a pretty decent week for the bulls. Nimesh, stocks, and yesterday you alerted us quite rightly about Bharat Forge. That's come through. So what are you looking at today?
Well, Sylvie, I'll share something on those lines for another company as well. But to start with, the first stock on my radar is SAIL. I believe there is a strong buying interest back in that particular stock from HNI investors as well. Post the conference call which was there in the afternoon, and hence after that you've seen a bit move in all the metal names, including SAIL as well. So that's the first stock on my radar. The second stock is Aurobindo Pharma. That stock is relatively outperformed in the pharma names today, and there is a strong buzz of a corporate development soon. Remember, even in quarter 4 con call, most of the investors were asking for on the update on the demerger of the injectables business. So that is something I guess the market is looking out for in days to come. So that's the reason why Aurobindo Pharma is in focus today. The third stock is NHPC. It's kind of a forgotten stock. Nobody talks about it much anymore. There was a large block of 5 crore shares today. I believe a leading AIF fund was a buyer in today's block deal. So watch out for NHPC in terms of volume data as well in today's trade. And the last stock is Thyrocare. We spoke about Dhanuka a couple of days back. I gave a hint about Bharat Forge yesterday. Now I'm told that there's going to be a large block in Thyrocare as well. So its stock is up 10% today. It's been being a rank outperformer, but I believe there is a large block deal coming very soon in Thyrocare. So watch out for that. So these are the few names that I've picked up today.
All right, Nimesh, thanks a lot for that. We will most definitely keep an eye out on all these stocks. Thyrocare in particular up 10% as we speak. But good time to get Mitesh back for the tomorrow trade. Mitesh, at the start of the show, you were saying that you may look at a couple of these metal stocks for BTST. Have any of them so many akin?
See, I have in fact chosen Jindal Steel and Power as one of the calls. That's a buy with a stop at 412 for targets of 438. And Aurobindo Pharma, I think very strong price and volume reversal happening over there. That's a BTST with a stop at 996 for targets of 1024.
Okay, got that. Thanks very much. Yes, Mitesh, indeed you have brought in that metal call on Jindal Steel. Speaking of metal, SAIL has been, of course, sailing away. Stocks holding higher. Numbers seem to be all right. Let's actually bring in Nigel to understand what's powering things through for this one. Nigel, good afternoon.
Well, afternoon. Early this morning itself, we had told you that in fact sales numbers are good on an adjusted basis. The stock, in fact, did spike up, and post the con call as well, it's got some legs. Though I have to admit, though Nimesh says that people are quite impressed with it. Everything that they said was more or less in line, and if they miss any of these estimates, then the street will be disappointed. But otherwise, the con call was good. I was on the con call for a bit as well, did manage to sneak in. Borrowing cost has come down by around 130 basis points. That's what the management has said. The imported cost of coal has come down from around that 14,000 rupees odd to around 11,500 rupees or thereabouts. Around 2 to 2,500 saving is what they have seen in the last year. In terms of guidance, they're given a guidance of around 18.5 to around 19.5 million tons odd. Sale, normally they give a guidance and then they miss it a little bit. And the street is okay with that as well. So let's see how much do they actually do in terms of a volume number. For the past year, they did a growth of close to around 5%. In terms of iron ore sales, just check this out. They're guiding for sales of close to around 13.5 million tons. And that's a tall ask because in the past year, they've done iron ore sales of close to around 4 million tons odd, but they seem confident, so let's see how much they can do. The capex, that was a bit of a worry. Remember, they had laid out a capex of close to around 4,000 crores odd, but the government of India was pushing them. They said you have to double that capex to around 8,000 crores odd. What the management says is that 8,000 crores will not be possible, but somewhere in the vicinity, for around that 4,000, a little higher number is what they guided for. So hopefully that capex doesn't spike up. Otherwise, the street will get spoke. The broad details in terms of the numbers, why were they so good? The adjusted EBITDA, well, that was much better at around 7,300 crores, or that compares with around 6,500 crores. Margins as well at more than 30%. That's a positive. Their valuation wise, well, it trades at a bit of a discount, and some would say rightly so in comparison to JSW Steel as well as Tata Steel. And finally, they have generated a good amount of cash flow. So the operational cash flows for the past year was at around 23,000 crores odd, which is absolutely splendid, which explains why the debt came down by 16,000 crores odd. So all in all, good set of numbers, commentary as well, more or less in line, valuations giving some support. It's for them to lose now, it seems, with the steel cycle quite strong as well. Back to you guys.
Absolutely, Nigel. We will most definitely keep an eye out on the steel cycle and the way these stocks move, and most importantly, whether SAIL goes ahead and meets the management guidance or not. We do have Dipan Mehta, the director of Elixir Equities, now joining us. Dipan, you've heard Nigel on SAIL. You've seen the metal cycle as well, and the kind of moves that we're seeing in the metal stocks in the last hour or so. So the question is that would you now back SAIL at the lower end of the valuation spectrum, or still stick with the tried and tested stronger names like Tata Steel and JSW Steel?
Good afternoon, and thanks for having me on your show. I think it all depends upon your risk appetite, because clearly I think SAIL is amongst the poor quality steel names considering its track record. And just as rising tide lifts all boats, we are seeing Steel Authority also do well at this point of time. But from a medium to longer term perspective, I'd go with the market leaders, the larger companies like say Tata Steel or JSW for that matter, which have consistently done well even when the chips were down, especially JSW Steel. And now that the entire sector is doing well, I think these companies will benefit. That Tata Steel and JSW will also benefit from higher production volumes, as and when their brownfield plants go on stream. In the case of Tata Steel, this is the best possible opportunity for them to have a closure of some sort as far as Tata Steel Europe is concerned, and if that would take place, then certainly it would improve the sentiment in the stock. So I think from a trading point of view, from a high risk, high return point of view, go with Steel Authority, but with a 1-2 year type of a view with steady returns, I think you still have some more gains coming through in JSW and Tata Steel as well.
More gains. Well, that's a phrase that we've gotten used to when it comes to metal stocks over the last so many months, right? Deepan, stay on. We'll have more questions for you. Now, one sector that's obviously been in focus is housing finance, and it's been a great month of June for most of these companies. You've got gains ranging between 5% to 55%, with obviously PNB Housing taking the thunder away for obvious reasons because of that big deal that happened. Now, today, importantly, there are new guidelines from the Reserve Bank of India on internal audits. They don't come into effect, I think, till 2022, but important to know what RBI is saying. So let's straight away head across to Abhishek. Abhishek, explain this to us.
Well, Surabhi, as you mentioned, RBI has put HFCs into risk-based internal audit, that is RBIA, by June 2022. So all deposit-taking HFCs, irrespective of their size, as well as non-deposit-taking HFCs, which are more than 5,000 crore in asset size, will be put into this framework. So what is this framework? This framework means that, an independent and effective internal audit function will be there in any financial entity who provide vital assurance to the board and senior management with respect to corporate governance and entities internal control as well as risk management. So what is RBIA? Now it is an objective question answer format which with marks assigned to each factors or risk. The lower the marks, the better the things are running in that entity. Remember that this RBIA has been in place for scheduled commercial banks since 2002. So RBI has been strengthening risk management in HFCs. If you remember, a couple of years back, they had put chief risk officers in HFCs who check every process that is in place, and also the fact that fair practice trade is followed in HFCs. Back to you.
Okay, got that. Thank you, Abhishek, for those details. Now, Dipin, housing finance has seen quite a few headlines, right? Thanks to these high-profile deals happening in the sector. Do you see more upsides given how stocks are already trading? And which ones would you pick?
Yeah, I think so. I mean, it's an evergreen sector, so to speak. If the housing finance company is lending sensibly and avoiding developer loans, then typically it is able to generate easily a 10-12% type of a secular earnings growth rate. And I think the PNB housing deal has certainly brought spotlight back into some of the PSU subsidiary housing finance companies. And we particularly like Canfin Homes, which has been a very conservative lender focused on salaried lending and has not really got into developer loans. And right through the NBFC crisis also, apart from slower AUM growth, Canfin never got into major issues as far as their NPAs are concerned. Valuations are reasonable, and I think that this could be a consistent performer going forward. And of course, there is HDFC as well, the giant in the housing finance sector, and that also has been a consistent performer. Last couple of quarters have been pretty decent for HDFC, and a lot of value in subsidiaries and the possibility of unlocking over there as well. So these are the two companies which we are quite positive as far as housing finance companies are concerned. But per se, I think within the NBFC, if you want to take a little bit more risk, then the best numbers came through from gold loan companies, and you could perhaps give a chance to microfinance companies also, now that the unlock trade may come into play. And lower restrictions would mean better utilization and better collection for NPAs for at least the housing microfinance companies.
All right, Deepen, take that point. Thanks a lot for joining in. With that, we'll step to a short break with the news that a lot of these stocks are moving higher. In fact, the last hour call from Mitesh was on Aurobindo Pharma as well as JSPL. Aurobindo Pharma has now actually extended its gains. It's sitting with a gain of almost 5.5% at the high point of trade. What we'll do is take a short break, come back and track down the market closing for this week.